It would be an understatement to say that 2021, though a very tough year on the personal front for many Indians, has been a phenomenal year for Indian investors. Whether you invested in equity, real estate, gold, cryptocurrencies, there are high chances that you made money, and you made a good amount of money. Markets, for one, have been on a tear most of 2021, of course, ending the year with a bit of a dampener, but overall, markets have rebounded in a way that very few expected. What does that then mean for 2022 as far as equity markets are concerned? Remember, we're entering 2022 under the shadow of the Omicron. No one is very clear what happens with it. We know it spreads very quickly, but we don't know if it will lead to more restrictions or more severe disease. We know that the US Fed wants to hike rates and will be tamping down on liquidity in the coming year. We know that FIIs are already beginning to feel the heat, and we know that global supply chain issues might continue. Now, in this context, what can we expect for the Indian markets? To speak on this, I'm joined now by Nikhil Kamath, co-founder and CIO of Zerodha. Nikhil, great to have you back on the show. How are you feeling going into the new year as far as markets are concerned?
Hi, Tamanna. Thank you. So I feel like we're kind of like walking into the new year from a very elevated position. Markets, in terms of valuation to multiples, are very expensive today. I think 2 or 3 big issues that everybody needs to pay heed to. The fiscal deficit, the numbers which came out recently are worrying at $15 billion a month. If that trend were to continue, I think will put a lot of pressure on our currency, even though our reserves are so high. That, along with inflation, which pragmatically seems to be much higher than the number is being reported. And the new COVID variant, I think if it's affecting so many different pockets in the world and so many different geographies, I don't see any reason for India to be complacent, the third time around and believe that it will not come here, even though we don't have COVID making news locally today. I think these things in culmination together with each other will cause significant, turmoil in the market in the next year. One should be cautious, especially considering the lofty valuations that we sit on today. And I wouldn't like to call it a bear year, but I think it's a year of circumspection, reckoning, where people kind of like, where so many people have gotten used to an unbelievable pace of rally, will have to kind of readjust the goalpost and look for things which are far more reasonable.
Do you think it will be particularly tough for the retail investor or the newly inducted retail investor, the large number of people who hopped onto the equity bandwagon when they saw the phenomenal returns in 2021? Do you think the largest adjustment comes from them? Because as we're closing down the year, there is a reality check on so many things, including the whole IPO buzz.
Yeah, so even, even if you were to consider the little bit of volatility we've seen in November and December, this is like 3-4%. Considering the magnitude of the rally, that's nothing, right, in terms of a correction. The problem for a lot of the new investors who have come in the last 1 year, I think, is the fact that they have made money so quickly. A vast majority have profited from the stupendous bull run that we witnessed in the market. And for these people to readjust expectations might not be easy. I'm assuming it's harder for someone to walk into the market, suddenly make 40-50% returns, and then continue to, have the resolve even in the next year to make, a return which is 1/10 of that. Maybe they make 5%, but they continue to remain rational when that happens. I don't know if it'll work out in that way. I'm a bit worried about what happens to retail who made money so quickly when the same is not repeated next year.
Yeah. What do you think are the big headwinds that India faces? You answered in part in the first question when you talked about the fiscal deficit and other such challenges. But do you think things like inflation, demand, consumer demand, which is improving but perhaps not at the pace that is required, a lack of private investment will continue to hamper the kind of growth and recovery that India is hoping for?
Yeah, I think the three issues which I mentioned are largely on top of the list. In between inflation, us doing bad fiscally, and the new COVID variant, I think the three together kind of like will determine sentiment to a large extent. Symptoms of that, like the FIIs taking out money, we've already witnessed in the last couple of months, and the trend seems to continue. From the people I talk to, it does not seem to be foreign institutions turning bearish on India. It seems that they're more often kind of reallocating their exposure to India and taking it down from pockets where the exposure had gone up, considering the historical average. They seem to be rebalancing India downwards and adding exposure to China and other countries again. But I think these three issues will kind of be the focus of at least early mid next year, maybe.
On the positives, factors that people are talking about is expecting corporate results to continue being robust, expecting economic recovery and demand to continue improving steadily in India. And of course, all of this comes with a caveat of we don't know if there's going to be a third Omicron wave. And the very little likelihood of major restrictions coming in, even if Omicron cases grow. Do you think that these factors will help mitigate some of those dark clouds on the horizon as we go into 2022?
Well, I hope they do. Very hard to call today if they would or they wouldn't. But in my own, book, I think the number of issues which will cause headwinds versus the good things which give us some kind of tailwind, I think we're looking upon more headwinds today than tailwinds, especially considering valuation today.
Do you think as FIIs have been showing this tendency to reduce their holdings, there is this narrative growing in the market that domestic investors are holding forth? We have seen them come in and buying on dips to some extent. The amount of money even in mutual funds, for example, has grown. A large number of Indians are now used to or getting used to the idea of allocating money for equity markets more steadily. Do you think that the domestic investor overall will consolidate next year?
Possibly. I think that penetration number in India is extremely low. We had maybe 1.5% of the population which participated in equity markets. Maybe that number has gone up in the pandemic time to about 2.25%. When you compare that to other geographies, like you think of America, for example, that number is as high as 50-60% in more developed markets. So as the economy grows and there is increased urbanization in India, more people have access to banking, especially where inflation sits today. Your traditional investment modes of bank FDs and term deposits no longer really beat inflation. So I think the number of people, the amount of retail coming into equity markets will only go up. I think it will exponentially grow at some point if inflation continues to persist at the levels that it is today. And I wouldn't be surprised if over the next decade we see that number go up from 2% to 4, 5, 6%.
There was a report by Morgan Stanley that said that we could hit 70,000 on the Sensex next time this year. This was during the end of November. Looking at all the factors we've seen since then, the Fed making very clear that they're going to start tapering down and by March, and then there will be at least 2 interest rate hikes. Looking at Omicron and other such factors, do you think that that's a long shot now, 70K by December 2022?
I would think so. I mean, never say never. Who knows what happens in the markets? But I would think it is a long shot. I think there's plenty of room from where we sit today to 70K, and I probably would not be betting on that.
What about valuations in the Indian markets? There is a sense, especially with certain categories of companies, whether there's a new age consumer tech companies or the recent IPO listings, that investors came in at pretty high prices. Valuations are rich. And they may have to wait some time before seeing good returns. Do you think that that theme will continue and the Indian market is going to be a little more difficult place to pick and choose considering rich valuations?
I think a lot of the IPOs which happened in the last 6 months to a year were very efficiently priced, or they were quite expensive in my view. That trend will continue as long as there is appetite for it in the market, which we have witnessed in the last 6 months, and we've come to the realization that there is. IPOs today are becoming more a product of how well the issue is marketed and who the lead manager is and who the bankers are. People are spending less time researching the company that they're actually subscribing for, and more time, listening to market pundits and the marketing engines of these companies per se. I hope that trend changes and, people go back to finding value and researching the company and seeking profitability as the benchmark for how much they're willing to pay as a multiple to that company. I hope we go back there. I don't think it would be bad for the market if we had more reasonably priced IPOs in the future.
So for a certain category of companies, whether you call them startups or unicorns or consumer tech, profitability is not considered the most important thing anymore. It's about reach, etc. Do you think that flavor of the season, so to speak, will persist? Because there are a lot of other startups in queue to hit the equity markets, and the whole startup space has been red hot in 2021. Do you see that trend continuing?
I would assume so. I would not like to generalize because some of these companies are okay and some are not. In my view, to a large extent, I don't know why they're called startups, because many of these guys have been around for 10 years, 15 years. Like we ourselves have been around for 12 years, but we still call ourselves a startup. I think profitability will become core to business when things are not going well. In a bull run, there might be appetite for all kinds of companies, but take that away and think about investing environment wherein interest rates have gone up, inflation is much higher than that, actual money is losing value, and people have to find assets to kind of hedge against inflation. I would assume people will then allocate wisely between things like gold and real estate and equity, and the premium that we have witnessed in the last 6 months or 8 months, I don't think that will continue to last forever.
Let me talk about the other space, which has been red hot and something we've discussed in the past as well. You have very clear views on that, which is cryptocurrencies. For a lot of Gen Z, it has been something that they have stumbled upon, discovered, and loved the returns that they have been seeing in 2021. We're ending the year with the continuing confusion and lack of clarity on policy measures, but it seems pretty clear that they're not going to be forced to shut shop. Do you think that crypto craze will continue?
It will, I think, because, there are such big champions for the cause. Each time I say something about it on my Twitter or something, I get a lot of critique, It could be the silliest thing, like calling it cryptos versus calling it crypto, which I'm meant to do and stuff like that. These early backers and proponents of crypto will not let it die down for a long time. I don't think there's anything wrong with crypto. I think as an asset class, if one is able to regulate it, one is able to tax it efficiently, like they're proposing, I think it's fine as an investment asset class. The question is it relevant as a currency? Is it relevant as a means of exchange between people in the manner that it is structured today? I don't think so. But if somebody were to believe, or a group of people want to come together and believe something has value, and they want to store a certain part of their asset base in there because they all together think it has value, I think that's their call, right? It's up to them. Will it become like the means of exchange for me and you, and for people in the general public to transact with? I doubt that.
No, but that's pretty clear that it's not going to be a form of currency. I think the crypto community also knows that, the exchanges know that, they're very passionate backers seem to know that. They're pushing for it as an asset class. My question to you is, do you think that even the extent to which average Indians can transact or acquire crypto as an asset class is likely to be curtailed? Because that is one of the options from any legislation that comes out, that they will make it more difficult to enter and exit into this as an asset class. The underlying concern seems to be that people who don't quite understand it are getting into it.
Yeah, there should definitely be regulation around, these fancy sales pitches that you see online, make 200% a year, trade in crypto, stuff like that. I don't think that should be allowed. That kind of like tricks a lot of innocent people into participating in that ecosystem. From a regulation standpoint, if it were to be taxed, let's say, for example, how trading income is taxed. If you're trading and you're using derivatives or something like that, you pay income tax on that like business income. If cryptos were to be taxed like that, I think they would suddenly become a lot less attractive, even for people who think of it as an asset class. We did a tiny research project, and we were trying to figure out where crypto is concentrated. We looked at the world, and we figured a vast majority of it, as much as 85%, is in the US, or people in the US who hold wallets. The crypto belongs to them. Even in terms of where it is exchanging hands, there isn't very much data, but I don't think anybody is exchanging, or a reasonable enough proportion of the crypto audience is exchanging, say, Bitcoin, for example, for anything relevant or for anything that has value. I feel like a lot of below ground kind of business happens in crypto, and I don't think unregulated, allowing it to flourish in that manner is the right way to go. I think there should be some kind of regulation. It has to be fair. I think a lot of people have put in so much work into crypto that dealing with them in a manner of, kind of saying that all of you have to shut down, or, all of you can't continue to operate, might not be fair. But maybe there is some middle ground that has to be found there from the regulators and the government.
That actually would remain one major event from the policy point of view to look forward to next year. The other will, of course, be the budget. Do you have high expectations from what will come in the budget? Do you think it will be the next big mover for markets?
Well, I must say, it's the most worrying time of the year for me, because so much happens on an overnight basis during the budget, where one cannot really control the risk, right? You either wake up to a shock or a positive surprise, and either ways it's a lot of volatility in the market, and it's very worrying, and a lot of people either make a lot of money or lose money, but either ways it's a strenuous time. There's plenty that the government can do to change our industry and make it a bit more efficient for the small guy, the retail investor, the speculator, to be profitable. We have a big wish list, but I would start with something like security transaction tax, STT. We've, as an industry, been speaking about this for a long time now, and many times they have said they will rationalize it, they will take it away. The problem here is, For a retail investor who is trading with, say, 5 lakh rupees in his account 10 times a day with a certain amount of leverage, if he's trading a derivative contract, just the STT component makes it so much harder for him to be profitable at the end of the day. I don't think that is fair when you were to compare that with other geographies across the world, and some kind of rationalization there will go a long way and help the ecosystem become more robust. I think if the cost of transacting in India goes down further, it will only encourage more foreign participants to come into the country and kind of trade on our exchanges, invest in our economy, and the pie will grow overall. And I think that's a change that has been long due, and I hope something happens around that. Another big thing we are hopeful of is taxation on derivatives. Taxation on derivative happens at the highest slab. So say, for example, you're running a portfolio of 10 stocks and you're using Nifty futures to hedge that portfolio, or using option strategy to hedge that portfolio. On the long only portfolio, you end up paying, let's say, short-term capital gain tax of 15 plus surcharge 16-17%. On the hedging component, if you end up paying tax at 40-43%, it discourages people from running more robust strategies, hedging for risk. I don't think that is right. I think we should encourage people from, diversifying, using better strategies which have an element of derivatives in that, to have more robust portfolios. And rationalizing that tax rate again will go a long way and it'll help. I feel like as long as people are taxing income at a reasonable rate, a lot more people will pay tax and do things in the right manner, and this will really discourage all the dabba trading or the CFD kind of marketplaces, which are a big issue in India today.
Yeah, so that's the wish list for the FM from the budget. As we close this conversation, Nikhil, your thoughts on how this year has been for Zerodha and your outlook going forward. It's been a phenomenal year for you guys.
Yeah, I would say for everybody in the fintech ecosystem who is some kind of a tech-first platform, everybody has done well. Like we've done well. Every competitor of ours has grown. They've done well too. I don't think the pace of growth is necessarily sustainable, and nor should it be, because it's an anomaly that all these people had so much time at hand and they suddenly started investing. I think it'll rationalize to a more normal 20 to 30% kind of growth rate year on year in the future. And I think we're happy with that. As long as we have stable markets where the valuations do not run up so much that, one day we have this 30% correction kind of ecosystem. As long as that is not the case, it's good. I guess the market should go up a little, come down a little, trend up over the long term. But I think the gains and losses, as long as they both are reasonable, is okay.
So if I were to ask you that, in broad terms of the number of people who came in at the start of the pandemic, or even if I were to take the start of the year, how many of them have stuck around? Have those investors stuck around, or have some of them fallen by the wayside after making their initial returns?
A lot of them have stuck around for the simple fact that a lot of them are very profitable today. Everything has rallied in the recent past. Everything that you could buy, the magnitude of the rally could be different. Something has gone up 10%, something has gone up 50%. But most stocks have done well in this last 1 year, and people who have invested have been beneficiaries of that. I don't think people kind of stop investing when things are profitable. People generally, in my experience, stop investing when they have that one big loss and they're stuck with some equity and they don't look at their screen for the next 1 year waiting for it to come back. So right now, since people are profitable, they continue to participate.
All right, here's to a profitable 2022. Thank you so much, Nikhil, for joining us, and wish you all the best and a great new year.
Thank you, Tamanna.